Good morning, everyone, and welcome to the program. I am Nancy Naji. Last week, the management of the Nigerian Exchange Group was at the presidential villa with an impressive scorecard for President Bola Ahmed Tinubu. We saw that the market capitalization has been up from about 30 trillion naira in 2023 to about 160 trillion naira today. The all-share index has more than quadrupled. It is a great story, but forces a much bigger question, because if Nigeria is serious about building a $1 trillion economy, that means we need roads, housing, factories, and global-scale tech companies. But who is going to finance all of this? Because government debt cannot do it alone. Commercial banks, of course, cannot also do it alone. And if we're serious about building that $1 trillion ambition, the Nigerian capital market has to be the primary engine of capital formation. We cannot just treat the NGX as a trading post for existing shares. It must become the institution that finances production, clears the pipeline for startups to raise local public capital, and turns Lagos into Africa's true financial hub. So this morning, I'll be asking the hard question: is the NGX really ready to carry the weight of a $1 trillion economy? Joining me in a moment to dissect this is Wale Salami, founder and managing director of Midlothian Angel Network, Texas, USA. Before we get into that, do not forget to follow us across all our social media platforms displayed on your screen. And if you have not subscribed to our YouTube channel, please do well to do that right now. Moneyline with Nancy TV. Hit that subscribe button to catch interviews, high-profile interviews, as well as insightful breakdown. And if you miss any part of this broadcast, don't worry. You can catch the full replay right here at 1 a.m. That's 1 a.m. Tuesday morning. So you catch the replay. All right, let's begin by taking you through the news. We'll start by telling you that Nigeria and other developing countries have called for a fairer global tax system to ensure multinational corporations pay their fair share. The Global Alliance for Tax Justice made the call during UN tax negotiations held at the United Nations headquarters. The Alliance's executive coordinator, Dr. Dejere Almayeko, urged countries to strengthen tax transparency and ensure fairer distribution of taxing rights. Nigerian aquatic products will now have zero tariff access to China's market of our 1.4 billion consumers under a new protocol signed by both countries. Chinese ambassador to Nigeria, Yu Dunhan, disclosed this during a visit to the Power Minister Joseph Tebe in Abuja. He said the bilateral trade reached $18 billion in the first half of this year, while Nigerian exports to China rose by 80%. The protocol was concluded after nearly 5 years of negotiations. The Central Bank of Nigeria supplied $953.41 million to the foreign exchange markets in March 2026, which is a 291% rise from $244.13 million in February. According to the CBN's quarterly statistical bulletin, $950.10 million of the March sales was through spot market transactions, while $3.31 million went into ministries, departments, and agencies. The figures show a renewed effort by the CBN to support FX liquidity after lower sales in January and February. The Revenue Mobilization Allocation and Fiscal Commission, RAMFAC, has completed its review of Nigeria's revenue allocation formula and remuneration for political, public, and judicial office holders. RAMFAC Chairman Dr. Mohammed Bello Shehu disclosed this. He mentioned that the proposed revenue formula aims to ensure more equitable distribution, while the remuneration review is at an advanced stage. The federal government has identified more than 4,000 abandoned mine pits in Plateau State as potential sites for investment in energy, tourism, and fishery. The Minister of Solid Minerals Development, Dele Alake, disclosed this in a statement following the collapse of an abandoned tin mine in Kasa, Barikin Ladi. Alake said the government wants private investors to help transform the dangerous sites into productive economic assets. Nigeria's economy is undergoing significant changes, but for many citizens, the key questions remain whether these changes are translating into better living conditions. With the rising cost of food, transportation, and other essentials, Nigerians are asking if economic growth is being felt in their everyday lives.
Nigeria's economy remains one of the largest in Africa, yet many citizens continue to grapple with the realities of high cost of living, inflation, unemployment, and declining purchasing power. Despite government reforms aimed at stabilizing the economy, many Nigerians are still questioning whether these policies are translating into meaningful improvements in their daily lives. Although some economic indicators point to gradual recovery, many households are still struggling with the rising prices of food, transportation, and healthcare. Small and medium enterprises also face high operating costs, expensive energy, and limited access to affordable loans, while many young Nigerians continue to struggle with unemployment and underemployment. Nigerians say that the 2026 economy is not working for even up to 15% of its citizens, urging the government to go back to their drawing board and figure out what to do.
If someone should come out and tell me out of 100% that the Nigerian economy is even working for 15% of people, that person is a liar. It's something that we should cry about. Every Nigerian citizen should put their hand on their head and start crying about the streets. The price of things in the market is very expensive. You buy something of 200 naira today, you go tomorrow will be 500 naira. Next tomorrow will be 1,000 naira. Please let them go to their drawing board. If the economy of Nigeria is good, there will be enough food for us to eat. Things will cheap.
Some Nigerians argue that the general standard of living has not deteriorated so much, claiming that we all have to make sacrifices for a better nation.
When you say standard of living, generally on the average, it has not deteriorated so much. Hardship is there, fine, but not to say it has worsened so much. The sacrifice is for everybody. Even the rich is feeling the pinch. So it's working for everybody the way it should, based on the fact that we are transforming from a stage to another stage. When you are transforming, you must make sacrifice. You must pass through pain.
Citizens lamented on how high rent has become, coupled with lack of job opportunities in the country, stating that the governments are only for themselves.
Some years ago, we used to pay for like a one-bedroom apartment in outskirts. You can get it for like less than 400,000. But now, in those outskirts, you can hardly get the one that is even up to 600,000. It's from 800 to 1 point something million. Many people are out of jobs every day, and they're finding it difficult even to transport themselves to their various workplaces. It's so bad.
The economy presently is not working for the average Nigerians due to the inflation of a lot of things, from the transport to the food materials. Everything is so expensive. Like I always say, it's like the past administration is always better than the present administration. To me, there's nothing that's working in Nigeria. The governments are just for themselves.
Another citizen say that year after year, the economy keeps getting worse, noting that every citizen is feeling the heat of the harsh economy.
Everybody is feeling the heat of the economy. Do you understand? Right from the middle class, even the upper class now, we are all feeling from the heat of the economy. Last year we were complaining that, the economy, this and that, but you can see that, even last year was not better than this year. Year after year, the Nigerian economy is operating under inflation.
While there are signs of economic recovery, many Nigerians are yet to feel its benefits. For the economy to truly work for citizens, sustained reforms, sound economic management, and targeted policies that improve living standards, create jobs, and support businesses remain essential.
All right, let's delve into the markets now, and we'll start from home, especially Nigerian system liquidity. Talking about the money market now, fell last week from 4.31 trillion naira at the start of the week. That's, I'm talking about last week now, to around 3.56 trillion naira on Friday, as primary market repayment drained cash from the system. The Nigerian overnight financing rate, that is the NOFA that you're seeing here, has been steady at around 22%. And we saw in the treasury bills market, we saw that demand, of course, in the treasury bills market was strong at the MTB auction, with about 4.41 trillion naira in subscriptions against 1.45 trillion naira allotted. The 364-day bill, that's the 364 stop rate, now rose about 24 basis points to 17.59%. The CBN's OMO auction last week also attracted heavy demand at 4.90 trillion naira subscriptions for about 600 billion naira on offer, with 2.60 trillion naira allotted. The FGN bond market was bearish anyway, with the average benchmark yield rising about 7 basis points to 16.78%. But if we take a look at the naira, as you can see right here, the naira gained a little over 0.5% last week to close at 1,357.60 kobo at the official market. This was Friday's close. Of course, markets across Nigeria have started trading right now, money markets, capital markets, and the likes. But if we come back to the capital market, the stock market, trading volume jumped last week with 12.15 billion shares worth 176.06 billion naira changing hands, but the market lost ground. The all-share index fell about 1.2% to 242,619 points. So you can see the red arrow there. When you see red, that means that the market is bearish. Bearish means say they go down. You know, the market depreciated. That's just it. There's no long grammar about it. The market capitalization finished at 156 trillion naira. Now let's move abroad. U.S. stock futures were mixed this morning. We saw that the Dow futures was down 11 points, while the S&P 500 futures were up about 0.10%. Nasdaq futures higher at about 0.35%. Wall Street is coming off 3 straight weeks of gains, and for the S&P 500 treasury yields are also easing ahead of the FOMC minutes. The 10-year yield is around 4.67%, while the 2-year yield is around 4.15%, and the 30-year at about 5.24%. But in Europe, this morning, we saw the stock 600 opening higher, up about 0.22%, with mining and technology stocks leading the advance. Shipping giant Maersk also hit its highest level since August 2022, rising on strong earnings and higher freight rates. Now, if we take a look at Asia, markets were mixed. The Nikkei 225 gained, the CSI 300 gained, Hong Kong Hang Seng added about 1.34%. Australia's ASX 200 fell about 0.46%. The news we're also getting from Asia concerning Japan is that the economy grew 1.1% annualized in the second quarter, below the 2% expectation, as weaker domestic demand offset strong exports. The dollar also is under pressure as I speak. The dollar index is down 0.18% as market reduced their expectations of a September Fed rate hike. Now let's talk about oil. Oil price, of course, remains the big global watch point. Brent crude rising about 0.76% to around $89.19 a barrel, while WTI gained 0.5% to $82.85 as the U.S.-Iran conflict is really right now showing no clear diplomatic breakthrough. So back home, the global oil story matters even more because Nigeria's crude oil production fell to 1.546 million barrels per day in July from 1.583 million barrels per day in June. So this morning, what are we watching? The market watch list is very clear. Global geopolitical risk, which has been on since about February, All prices, of course, the next move from the Fed, Nigeria's inflation data, we're expecting it, Nigeria's liquidity condition, the Naira also, and whether the NGX can regain momentum after last week's decline, about 1.2% in the red. And of course, when we come back from the break shortly, I'll be talking about the NGX, and like I mentioned earlier, if the NGX can really carry the weight of Nigeria's development, Nigeria's productivity, and do more than it is doing now. Is it just market cap of 160 trillion naira? All that and more when we return. My guest will be joining me after the break. Do stay. Every day, decisions are made in boardrooms, ministries, and markets. But who asks the questions that really matter to Nigeria? I go beyond the headlines, speaking with policymakers, business leaders, and everyday Nigerians affected by every policy and market shift. Citizens are saying, with even the little you say you are getting now, how are you spending? What kind of wake-up call do you think that we should have right now?
Nigeria is in a good place in terms of the global demographic.
From inflation to investment, banking to business, I ask the tough questions with sharp analysis, detailed research, and real conversations. Because when it comes to business, finance, and the economy, you deserve clarity.
People like you have interaction with the public, our close partners.
Join me live on Moneyline with Nancy, weekdays on AIT, 10 a.m. to 11 a.m. All right, welcome back to the program. Joining me right now is my guest. He is Wale Salami. Is Wale Salami on right now? Can I? Okay, good. Wale Salami is the founder and executive director, Midlothian Angel Network in Texas, USA. Good morning, Wale, and thank you for joining us. I know it's very early in the morning there for you to wake up and join me here in Nigeria. Welcome. Wale, I can't hear you. Can you unmute your mic? Can you hear me now?
Hello?
Yes, Wale, I can hear you now. Can you hear me too?
Oh, great. Great.
Good. So welcome to the program. Sorry you just have to wake up to join me on the program. All right, let's get started, Wale. If we take a look at the NGX, it's performed well, as it were, from about 30 trillion naira in 2023 to where it is around right now. Do you think that should be the big story, that we should all be talking about how much the exchange has been able to grow in terms of market cap and all of that?
Well, I mean, absolutely. We should give them kudos.
they've done a wonderful job. I mean, growing market capitalization from 30 trillion in 2023 to 160 trillion today, this year, is commendable, right? But I think what we are seeing in the Nigerian capital market is significant. I think it's significant and it's worth celebrating. But the bigger conversation should start from where the headline ends, right? They've done a wonderful job. They should give themselves a pat in the back, right? But we have to distinguish between market capitalization and capital formation, right? A rising stock market can increase the value of companies, but on paper. But that doesn't necessarily mean that an equivalent amount of new capital has gone into the real sector, like into building factories, infrastructure, technology, or businesses. And that's the question I think Nigeria needs to ask as we pursue these audacious 1 trillion economy ambition. The question is, how do we convert capital market momentum into productive investment? We need to think about the entire capital ecosystem. I'm talking about the pension funds, the banks, insurance companies, angel investors like myself, capital, the venture capital practitioners, private equity, private credit, infrastructure finance, and ultimately the public market. If we put those pieces properly, we can move capital from savings into businesses, and from businesses into scale, and from scale into jobs, productivity, and economic growth. So I don't see the 1 trillion naira as the finish line. That's my submission. I see it as an opportunity to ask a much bigger question, which is, can we build a capital market capable of financing the Nigeria that we want to become?
And do you think we can do that? Because you actually said that we should differentiate between capital formation and market capitalization, because even if we look at it from 2023 till now, which is about 3 years, I'm actually also thinking how much new capital have actually been raised by companies. That's one. How many new companies have been listed on the exchange? That's two. Vis-a-vis the increase in value of existing shares. This market also financed the just concluded bank recapitalization, and it pulled about 4.6 trillion naira from this same market. But how do we juxtapose these things that I've just talked about?
I think that's a very very interesting question. Thanks for asking that. What I would like to do is to give a distinct differentiation between market capitalization and capital formation, right? Market capitalization tells us what companies are worth, right? Literally on paper. Yes. But capital formation tells us what the economy is capable of building. Imagine that I own a company, say WS LLC, right? And the shares is worth 100 million naira. And investors become more optimistic, and and the share begins to rise, and it rose from 100 million to 150 million. My company's capital, my company's market capitalization has increased by 50%. That's good for the shareholders, right? But the company didn't necessarily receive 50 million of new money to build a factory or hire 500 people. I saw the interview preceding this. The video preceding the interview about people complaining about it not trickling down, right? So when we celebrate NGX reaching 160 trillion, we absolutely should celebrate that, right? But the next question should be, how much of that market confidence is translating into new capital for productive investment? I think that's the bridge that Nigeria needs to build. And to answer your next question about the sophistication of how deep the market is to be able to finance some of those ambitions, I would like to give you I did a research a few weeks ago, and I just posted 3 different capital markets. I looked at the South African capital market, which we all can relate with, and then the US capital market. That is globally relevant, and then I compared it with Nigeria. When it comes to market capitalization, the Nigerian capital market is worth about $106 billion, right? Yes. As opposed to South Africa, worth $1.2 trillion, right? Let's not even talk about the U.S. capital market, because the U.S. is an outlier.
Yes.
right? But the US capital market is worth 62.2 trillion. That will be an unfair comparison,
yeah.
in my opinion, right? But where I want to go is actually how deep is our capital market, is NGX, right? Nigeria's capital market, as a composite of the GDP, is 21.6% of our GDP, of the Nigerian GDP, whereas the South African capital market is 220% of the South African GDP, right? The US capital market 216.3% of the US economy. So do you see where I'm going here? It means that we have, the Nigerian capital market is actually quite shallow, even though that problem, right? But the reality is really an opportunity. It means there's room for growth. So when I see us celebrating 160 trillion, I'm just laughing because that's like we haven't even scratched the surface at all, right? But so let me go to the next metrics. The next metric is number of listed companies on those three exchanges. According to my research, in Nigeria we have about 169 companies listed. In South Africa, 220, whereas in the US we have over 4,010 companies listed on the US company. And you know the US actually has two exchanges. Interestingly, a third one was just given birth to in Texas, in Dallas, where I live, right? The next thing will be the value of shares traded as a percentage of GDP. In Nigeria, it's just 0.61, right? Whereas in South Africa, they have done an impressive job. You know, their share of GDP to number of shares, value of share traded is 47.8, right? In America, is around 50%. So for me, that is the question. You know, the question is not whether they haven't done a great job. Growing a market 5.3x, from 30 trillion to 160 trillion is very commendable. You know, however, the next question should be, where do we go from here? How do we ensure that this market confidence trickle down to the common man on the street?
Yeah, but is the market actually even built for the common man? Because let's also just suppose this. Just last week, the chairman of the NGX group and the group CEO, that's Umaru Kwaranga with Temi Popola, went to visit the president at the presidential village. I'm sure we saw that picture earlier on, and I think the SecDG was also there. They went to give the president a brief, as to, yes, that's it there, talking about the development of the capital market. And I'm sure that the president would definitely be happy, because even reading articles from that is the villa, the market cap is put at as one of the achievements of this administration in terms of the growth. But I heard you clearly. So where do you think that this problem is actually coming from? Is it a problem of a shortage of money? Or is it that Nigeria is suffering from a shortage of bankable, investable projects and companies capable of absorbing capital, long-term capital? What is the missing bridge between Nigerian entrepreneurs as well as the public capital market? Then also add to that question which I asked earlier. You mentioned that the capital market should work for the common man. But is the capital market really for the common man?
Thank you. Thank you, Nancy. That is a very legitimate criticism. I'll go with the last question, then I'll go back to answer the first one. Is the capital market really for the common man? That is why it's called the public market, right? I'm an angel investor, so I invest in private equity, meaning companies that are like young, just growing, they're yet to like go to the right. So the reality is, in the US, for you to be able to do what I do, to invest in private equity or private markets, you have to be called some. You have to pass this particular accreditation called the accredited investor, right? Meaning you must be earning above about $150,000 annually, right? So is that really meant for the common man? No. So the private market has already pushed out the common man. what is for the public, for the average Nigerian, is the public market, which is the NGS. So yes, it is for the common man. Saying can we really can Nigeria really become a 1 trillion economy? I think that's the question. I'm trying to summarize it that way. Well, I think it's ambitious, but I don't think the ambition is the problem. The important question is what has to be true for Nigeria to get there. For me, there are 3 words. Number 1 is produce, 2, invest, and 3, scale. We need to produce more goods and services. We need to, as in, like, the government, and the government has done a wonderful job in with the policies. You know, I've seen that from global from global organizations, the ease of doing business in Nigeria has largely improved. That is great, but we need to produce more goods and services. The second one is invest. We need to mobilize much more domestic and international capital into productive assets. You know, and lastly is scale. We need Nigerian businesses to grow from small enterprises into large global competitive companies. The only sector in Nigeria that has done that well is the banking industry, and I applaud them for that. But what we need to do is, what the government needs to do is to go back, do a case study of what kind of policies help these banks to be able to do what they're doing, and let's scale it to say manufacturing, to other industries, right? If you look at our economy, we have a lot of foreign companies playing in Nigeria. That is well and good. The next level should be, how do our companies grow locally, domestically, and they're able to like compete globally. Say, oh, I want to open a shop in Ghana, in South Africa. Then leave Africa and say, what stops a Nigerian company from from opening shop in New York or Dallas, for instance? There's no, we live in a global market now, so nothing is stopping no one, you know. And a strong capital market is positive, but I believe that it cannot be our definition of economic prosperity, and that is why we are having issues with the common man, you know, saying they're not getting it right. It's not trickling down. If the NGS is really performing well, while households are still struggling with food, you know, housing, transportation, and healthcare costs, then we have to ask how effectively financial market gains are translating into the real economy.
So, Wale, do you think now that the 160 trillion naira market cap is giving us a false sense of hope of market depth, right?
Oh yeah, it is a false sense of market depth, but I wouldn't, you know, I'm very, very conscious not to criticize the NGS, because the reality is
because they've done a good job. They've done a good job. Even the Capital Market Master Plan 2025, they've done a good job. Even the regulator too have also done a good job. But we're actually saying regarding the potentials of the country, and the president wants a $1 trillion economy by 2030, we need to juxtapose that also. Our GDP right now currently stands at about $327 billion or so, and we've dropped to number 4. We were actually number 1 some years ago in Africa. Doesn't that also affect the quality of our market? Doesn't it also affect the ratings? Because if investors actually also want to come into Africa, they could look at the top 3 countries. These guys have more GDP than Nigeria as it is now. The business environment, what does it look like, and what have you?
That's a fair criticism, and that's an interesting question. Like, if you look at my analysis earlier on, where I compared the percentage of GDP to capital market valuation. Nigeria's capital market is 23% of the GDP, right? The first, you know, instead of chasing a $1 trillion economy, I think the first thing we need to do is to deepen the capital market, you know. And how do we do that? Is to ensure that we have policies that can help the common one assess the market. For instance, in America, 56% of households own shares in America, whether directly or indirectly, whether through their 401ks or, you know, some other, or having direct purchase on places like Robinhood, right? In Nigeria, that number is 6%. right? So that, like, we need to do a lot of, deepening. And the reality is, I don't want to be a prophet of doom. I wouldn't say we haven't done anything, right? I mean, right now we have fintechs like Bamboo, and
But
some others.
they are not listed on the exchange. Even the unicorns that we've built are not listed.
Yes,
the NNPC Limited, for example.
You can't list a brand new company on the stock exchange. It has to grow, right?
Yeah.
Bamboo is a.
No, I'm just saying. I'm just giving examples. Do you understand?
Yeah.
Even the unicorns. Yes, even the unicorns. Even the NNPC Limited, for example. So much has been said about NNPC Limited being listed for the past how many years? We do know that it's part of the plan. So if you take a look at that and some other companies, in fact, I'm on a WhatsApp platform, the Capital Markets Academics of Nigeria, and while I posted, that we're going to be doing this today, one of the members of our platforms, Mr. Femi Awoyemi, who is the founder of ProShare Nigeria, he mentioned something, bringing it to my attention this morning. And let me just put it. When I posted that we're going to be having this program this morning on the topic, he said that the NGX, of course, cannot deliver this as currently structured without MOFI, which is the Ministry of Finance Incorporated, as intended and designed. And I asked him, of course, to throw more light, because I know that MOFI is the manager of Nigerian shares, assets, and interest, and what have you. He now said the underlying public assets are within the mandate of MOFI. We can explore the financialization issue further.
I mean, he hit the nail on the head. I think one way out is the federal government can, more like do a case study of what is working, especially with the South African market. That market is very, very deep. They've been able to financialize and their capital market. That's one. Number two is speaking of NNPC getting listed. I mean, I have my concerns about that, right? Because for me, I mean, I'm a private sector guy. I honestly believe that government has no business in running any business, right? So are we talking about NNPC being privatizzed? I mean, instead of the government owning 80% and selling 20% to Nigeria.
It's not entirely privatized.
I know. I mean, I'm just saying that, if we really want to do it, maybe we might need to consider that. That's one. Number two, in the past, some government have actually made, interesting policies that kind of helped a few companies to grow. And I feel that, in hindsight, and I'll give a case in point, Globalcom. When at the advent of GSM, we had MTN. Was it Econet? Those ones, they've changed names several times now. So, being the major player. But the federal government felt like, okay, we needed an indigenous company, because those two were, foreigners coming in, which, I mean, is not entirely bad, right? But we need somebody who could also play locally and bring down the price. So, Globalcom came in, right? But I mean, they came in from day one. If you remember very well, Nancy, Globalcom was the first platform to do the per second
billing. Yes, when the other companies told us it wasn't possible.
Yes, when they were telling us, I could remember then my first SIM card, I bought it for, was it 25,000 naira or 50,000 naira? And I had a brother, I was living with my brother-in-law there, who told me that SIM cards were free in America. I thought it was capping. I thought he was lying, right? But looking back now, I mean, these things have to happen in different stages, right? But where I was going with Globalcom was, the mistake the federal government made with Globalcom was to have tied, those exceptional, those huge bonuses that they gave them, to tie it to their listing on the NGX. Because there's no point, giving those kind of concessions to private companies and not building a roadmap where it will benefit the average Nigerian. Right, so that is where, I mean, for me, that is where policy needs to get to. When we give, for instance, I mean, Dangote Refinery is going to come on the market, right? That is a great one. Imagine if Alhaji Dangote was selfish, you will just say, okay, I mean, let me just keep this to myself. There are lots of, one of the reasons why the Nigerian capital market is not as deep as it is today is because there are lots of companies that are so matured that are supposed to be listed on the market, but they're not. So government needs to look at how to incentivize them, because
that incentive should be what, really?
It's not deep enough.
Yes, what should be those kind of incentives? Because I know that when you want to list on the market, there are a lot of things you need to do. What kind of incentives are you proposing? That's one question. The other question is, in as much as you say that we have many companies that are big enough to list, but they need incentives, are we also taking cognizance that are Nigerian companies not becoming too large enough also to list? This is a country of 220 million or 220 million plus. It depends on. We've not done a census in a long time, so we don't have an exact figure. But you're seeing that many companies in Nigeria are not large enough to list because some of them don't even want to be formal. That's in the first place. Or is it that when they become large enough, the domestic capital market does not also offer them a competitive exit, as it were? So I've asked you two questions. You're talking about incentives, then we're talking about companies that are not also large enough to list.
So when it comes to listing, so I'll take the last one first. When it comes to listing on the stock exchange, it isn't really about how big a company is, really, right? And okay, number one, we said we are over 200 million people, right?
Yes.
The reality is that a company a nation the size of Nigeria, it is very, very abnormal for us to have about 200 companies listed on the. It's not even up to 200. It's about 160 something, right? That should be, for me. Those are the red flags for NGX, right? We need to get that number up because that's not enough. That's why we are not having deepening, right? So that is one. And when it comes to listing, like I said, you can list and say you are valued at 500 million, right? Or you can come onto the market and say you are valued at 31 billion, like Dangote, right? Even in America, valuations will always vary, right? And the market will always determine what it is. What is important is that we need to give the public investors, the retail investors, we need to give them more options, right? That would deepen the market and help with liquidity. One of the major problems Nigeria is having, the Nigerian capital market is having, is liquidity issue, right? And liquidity will become a problem when there's a limit to how many. When the number of stocks they can trade on is limited, right? Imagine you open a Robinhood account today, you have over 4,000 stocks to pick from, right? Compare that to 160 as it in the case of Nigeria. So that is with large companies listing. Are they mature enough and all of that? The first question you asked was incentives. What are the incentives that would make companies to list? And I would just want to own that on corporate governance. Many of our companies, we have a corporate governance problem in Nigeria, right? We have so many people who they just want to be the alpha and omega of their companies. They're not thinking about legacy. They're not thinking about where they want to be, what they want to do in the next 10, 20 years, right? They're not thinking of handing over that company to their kids, right? And for me, that is how you create legacy. One of the reasons why America is what it is today is because, corporate governance is real. Like, I serve on the board of a nonprofit locally here in Dallas, and after like 3 months of coming on the board, I was promoted to being the chair of the finance committee, more like the treasurer. The moment I got to that position, they sent mandates to the banks, the three banks that we had accounting, saying, "Oh, you need to add Mr. Wale Salami to the company's account." Guess what? I don't even need to, because we have an ED who we meet with every month for the board meetings, who gives us sends us all the granular details of the company, right? So I really don't need access to the bank accounts, but they had to do that because that is the law. right? And the interesting thing is that you will be shocked that Nigeria actually have some of those laws already, but implementation is where the gap is, right? We need to lean heavily on corporate governance. I love what the government has done with the tax reform. I think there should be a special place, in Nigeria history for the current finance minister. Mr. Taiwo has done a fantastic job. I mean, he's a man I have a lot of respect for, right? But what we need to do is to go into different industries and do the same kind of reforms, right? And because it is those kind of policies, those kind of reforms that helps a company to get ready. So when you say readiness for capital market listing, it has nothing to do with evaluation. It's more about the internal structures. Because I would not buy the stock of a company, that I don't have their financials. There are loads of companies in Nigeria who don't even, there are some companies. I'm an angel investor, right? We invested many of our portfolio companies high in Nigeria. You will be shocked that some of the experiences we've had. Sometimes we have to literally chase some founders around with calls and emails to tell them to provide quarterly updates. Whereas in America, there's a fund that we invest in America every year, a venture capital fund. The general partner of that fund, that's the guy managing it, sends us a weekly update, Nancy, weekly. And every month he shares the portfolio size and the watch exit watch, telling us, out of the 37 companies we invested in, 10 of them are about to be they're about to exit, right? I mean, that level of that sophistication of reporting is what is lacking, and that is why that's one of the major reasons why we don't have. I mean, the Nigerian coverage, the NGX is not that deep, right? We need regulators to stand up and be more. Proactive.
As you're talking about this, the exit gap, let me also talk about, of course, your article that you did. Which I read, I think in two financial news papers. You actually also did mention that you mentioned the specific bottleneck for private capital companies going from angel to VC. I just wanted to follow up on your last thoughts. Angel to VC to growth capital, but then skipping the NGX entirely to list, or perhaps when they hit $500 million or $1 billion, to list on other stock exchanges. So why is our domestic market currently failing to capture this exit? Because what does Nigeria now lose when a homegrown scale-up lists in London or New York? Let me also add this of institutional capital. We say so much of our pension, local pension capital heavily invested in government securities and low-risk assets. While we also want to protect those assets, what market incentives or regulatory shifts do you think are needed to safely channel those pension capital that we have right now into productive private enterprise and, into productive private enterprise without exposing the risk, because these are people's life savings? Very quickly.
Thank you, Nancy. That's a bouquet of of questions. I think I would start with the last one. Talking about
exit.
Yeah, talking about
angel to VC to growth capital.
Yes. So there's a reason why if I run a company in Nigeria, I would not want to list it in Nigeria, and I'm being honest with you as an investor. The question we need to ask is, so they move from the first level is friends and family funding you, right? Then after you got to some traction, you go to angel investors like myself or angel networks, and then the VCs come in with the big guns and all of that. You become a unicorn. The question is, where a company is. The first question we need to ask is, even though these companies are operating in Nigeria, where are they really registered, right? Because many of them have Delaware registration, right? And so this is where it comes. This is where it gets interesting. I might be operating in Nigeria, registered with CAC, right? But I would not be able to access capital in America if I'm not listed in Delaware. Mm-hmm. You see what I'm saying about policy and laws, right? That's one. I'm trying hard not to name a particular company, right? So let's say a particular company, if a popular fintech company has raised, we have a few of them now that are unicorns, and a unicorn is a company that is valued more than $1 billion, right, in valuation. let's say, for instance, a Nigerian-based company has become a unicorn, but before they did that, they raised $500 million. Nancy, the first question is, out of that $500 million, how much came from Lagos, Nigeria, or from anywhere, any part of Nigeria or Africa? I can tell you for a fact, it's probably about 5 to 10%. The gigantum, like the lion's share, came from abroad. So do you see where it's going at?
Yes.
Right. If I'm giving you money from Silicon Valley, right, and you want to go list in a market, that is 25% of the GDP, or the one that is 250% of the GDP. Do you see where, like,
yes,
the math is not matching, right?
Yeah.
So that is why that happens.
Okay, speak to the pension funds, because we have to go. We have 2 minutes.
The pension fund, we have to be very, very careful, because even in America, the idea of pension fund is for them. I mean, it's a class of investment where the risk profile protection has to be very low, and venture capital risk level is high.
Okay.
I mean, if you invest in a company, the company dies, what you get back is zilch, right? So for me, I would say we have to be careful about those, right? Another ways around it, I think honestly, this current government has actually done a wonderful job by even liberalizing, increasing the percentage of pension funds that could go into investment. I think we are doing well when it comes to pension funds.
Wale, in just a few seconds, because you mentioned Lagos earlier on, how do we position Lagos to be a primary listing destination for African corporates, especially with AfTA underway, for people to list in Lagos, positioning Lagos for West Africa and even beyond, because you mentioned even the Johannesburg Stock Exchange and even New York Stock Exchange earlier. So what do we do to position Lagos as Africa's financial capital? It's doing a bit well now, but it can be more. 30 seconds, yes.
Thank you, Nancy. I mean, the interesting thing about Nigeria is the fact that the indicators are there already. We don't need to position Lagos. Lagos is already the capital hub of Africa, right? The potential is there, because if you look at capital raised in the last 3 to 5 years, Nigeria has always come top. I'm talking about private capital raised by startups, right? We are always beating Kenya. Kenya follows us closely second, right? Even South Africa comes third or fourth, right? That is why I feel that it is abnormal for the South African capital market to be that deep. Nigeria is not, right? So we are there already. What else do we need to do is to create policies that would help these guys to be more productive. Right, I mean, we've seen some policies from some government, literally clamping down on startups. You don't want to scare them away, right? Because these guys are the one breathing they are the one laying the golden eggs for the future, right? We want to ensure that we need to treat them as the creatives that they have, and give them all they need to succeed, like Silicon Valley would. Right. So for Lagos to really claim the crown, because we have the potential of doing that already, government needs to, and we are on that part already, but we need to just be more serious, serious-minded. We should rally around, create the ecosystem of angel networks and all of that to be able to increase our share in many of these companies that are becoming unicorns.
Thank you very much, Wale. We've got to go, but if we're also comparing GSC, which is the Johannesburg Stock Exchange, we need to also take note that this is an exchange that came up, I think, from South Africa's gold rush in the 1880s, as it were, and our own exchange from Lagos Stock Exchange, perhaps in the 1960s. So we might give ourselves a slack a bit, but that doesn't also negate that we have potentials. I just needed to put that true. Thank you very much, Wale, for joining us.
Well said.
Yes. Thank you. I'll see you soon. And you can go back to bed now. Thank you very much. All right, I've been speaking with Wale Salami, founder and executive director of a Midlothian Angel Network, Texas, USA, and we've been looking at the ambition of Mr. President growing this economy to a $1 trillion economy by 2030, and if Nigeria's capital market can indeed finance that. That's the much we can take on today's edition of the program. Thank you all for joining us. Join me again tomorrow, same time on this station, another topic, another guest. Be the best you can be the change that you want to see. Bye for now.